Hello guys, Mr. Pips here once more. I'm delighted to share this information with you guys. Hope you have a nice time trading. Hope you're trading profitably, and hope that all this content that I'm providing for you, they are helping to shape your and to sharpen your intelligence when it comes to forex trading. Now today I really want to touch on a certain strategy when you're using the awesome oscillator. It's a strategy that has really helped me to make trades profitably. Now this strategy is called the crossover strategy. The crossover strategy, it's when these bars in the awesome oscillator, when it's a bullish trend, they bypass the zero level, and then they move upwards. And when it's on a bearish trend, these bars, they come bypass the zero level and then go beyond the zero level downwards to confirm a bearish trend. Now this setup is usually the best way to trade this setup. It's when the market is on a ranging move. Now remember, this strategy works well, and I want you to note this strategy works well on a trade or when the market is on a ranging move. On a ranging move, I mean that the market has no confirmed market direction. It's not either moving upwards or downwards, or in simple terms, the market is locked under a certain level of resistance and a certain level of support. Like for example, in this setup here, I'm using this market was locked under this level of resistance here and this level of support. It was just playing within that area. It was not going beyond or beneath that level. So now let's get to the crossover strategy. When you come here, you see you plot where the market is, where the bars are moving upwards. When they move upwards that way, you come and take your buy trade. For example, if I was to apply the crossover strategy in this setup, I would come here, take my trade right there in that candlestick. As you can see, it's right here. I would take my buy trade here, and then I would set a stop loss just maybe below here. I would set my stop loss here. Use proper risk management such that when this pullback is happening, it does not affect me, and it does not affect my mentality when it comes to fearing that you are losing a lot of money. So use a suitable lot size. Risk management is always key when you're trading, because sometimes not always all the strategies are 100% perfect. So here you come, so this market would have come, got to this level, and then retrace back, and you see it was a good market entry. Now let's go to a setup where the market is bearish. Remember, I'm trading the Boomer 100 index. This is a synthetic index in derivative. This is the derivative broker, and I'm trading on a 30 minutes time frame. A 30 minutes time frame is a very good time frame to do your market and your technical and fundamental analysis, because 30 minutes it's a broad time frame. It's a suitable time frame to do technical analysis as per day, because one day has about 48 30 minutes candlesticks. So within those 48 minutes candlesticks, you can have a very good idea of how the market is going to behave. And also the indicators always give us a better probability of good trade entries when you are trying to enter into a trade. Now if I was to apply a sell entry here on using this crossover strategy, you see I would have executed my sell entry on this level. You see, on this level, once again I'm trying to insist that the awesome oscillator does not give you the exact entry point that you're going to experience. If it's a bullish, you're going to experience completely bullish. If it's bearish, you're going to completely experience bearish. Sometimes it does not give you the exact market entries. All it will do, it might give you an exact signal to tell you that this market might go down, but it later then takes an upward retracement, or maybe it forms some bit of green candles here. Like for example, in this level we were trying to take a bearish trade here, so we would have taken our trade on this level, you see, and then wait until this market starts coming down, and you see we have made profits there. You see, if we would have even let this market to move further, it would have gone that way, and then come to this level, you see, or even take this, close this market as it's trying to take this upward setup. And again, I will insist that not always that the indicator is always 100% perfect. For example, if you look at this setup, now this market came, and then it came, and then it tried to cross over here, but it did not give us an exact long bullish trade to get into. Okay, so let's see, this crossover strategy applied very well. We would have won this trade if we took a sell trade from this level. It would have taken us up to that level, and it would have won us some money. Looking at this one, probably we would not have won, because we would have taken the entry right here. We would maybe have won from this point, and won up to that level, but not further. So look at this one. This one we would have taken a trade here, and it would have taken us up to this level. Let's look at this one. This one would have taken us from this level. It would have taken us from this level, and then brought us down up to that level, you see. Okay, the same applies to now. This one would have not given us a good run to take more profits, but this one would have given us a good run to take more profits, you see. Yeah, we would have taken this trade from here, and it would have brought us up to here. The same applies to here. It would have taken us up to this level. Yeah, so I hope that that knowledge is going to help you guys to become profitable traders. I'm very happy to share these moments with you, and hope that we are going to, this year we have to, let's set a plan and set targets and goals that we are going to attain when we trade. And all I wish you is a beautiful trading journey. Let's meet next time and learn more about forex trading.